Hi, everyone. I'm Steve Altishan, Director of Client Partnerships here at Pacific Cascade Legal. And today we have CPA and Certified Divorce Financial Analyst Ryan Finley to talk about understanding forensic accounting and litigation support in a divorce. Hey, Ryan, before we start in, how are you doing today?
I'm doing well. Thanks for having me on today, Steve.
Oh, I love it. And so before we just kind of start in on the topic, you want to tell people a little bit about yourself and, how you came to this kind of particular kind of work?
Yes, my name is Ryan Finley. I'm the founder of Freedom Financial Services Group, and I've been a financial, I guess, expert or person for 35 years. So, my background, I'm a CPA, I'm a CDFA, I'm a CVA, which is a Certified Valuation Analyst, and I'm a mediator. So the way I got into this business is I was in public accounting for 2 years and then went to work for a company in new business development and acquisition. So that taught me how to value businesses and to look at different things from a third party perspective. I did that, and then I've been in real estate, I've been in construction, I've spent about 35 years in the financial arena as CFO of multiple companies. And then about 5 years ago, I had a friend that was a divorce coach, and she said, "Hey, I've got this complicated financial situation. Do you mind looking at this after work and on the week, help me on the weekends?" And I was like, "Yeah, I'll help you." And I started looking at it, and it just, it, it, it made sense, and it felt good to help somebody that the client that she had no idea what her financial situation was. So I was able to look at it and explain it. And that's kind of how I got dip my toe into the pool of the divorce arena. And then, I got my certifications. I got my CDFA. I've had my CPA for over 30 years. And just kind of got into it. And it was self-fulfilling from the perspective of helping people. When somebody comes in and they're lost, and then you're able to help them explain it and calm them down and see their confidence build as they're going through this unknown situation. So that's in a roundabout way. That's how I got into this business. So
Wow, I love it. That you have hit all of the boxes that attorneys really like to try to find experts about in a divorce. That's kind of crazy. I mean, it's even the mediator part. I really like that. Okay,
thanks.
so let's start in on just this is kind of my 101 question because a lot of people don't quite understand it. And that is talk a little bit about just what forensic accounting actually is. I mean, it compared to other kinds of accounting services.
Okay, well, I'll start. Basically, forensic accounting is trying to clear up the financial picture, and that's trying to make complicated things into a simple form. And there's different ways to do that. When somebody hears forensic accounting, they say, "Oh, they uncover all this fraud in hidden assets and things." And that's a big part of the job. It really is. But the other side of it is doing litigation support, making sure attorneys understand the financial situation of the client, making them understand complicated bonus plans, making sure that there's an equitable distribution of assets. And from a client's perspective, it's, you know, my spouse dealt with all this our financial situation. I raised the kids. From their perspective, it's me taking all these components, this complicated financial situation, and explaining it to them in terms that they can understand. Just say, I know we had this, I know we had that. But what does that mean to me? And so from a forensic accounting perspective, those are kind of the things that in my opinion, make forensic accounting. It's, the making things clear, finding the hidden assets, and explaining things in a way that people can understand it.
Yeah, yeah, you're breaking down the complex and making it seem simple,
Yes,
which it isn't.
yes, that's a good way to
Uh,
put it.
yeah. So we talked a little bit about this. Obviously, kind of get into the discovery process because a lot of this stuff you're talking about is either revealed or kind of reviewed during discovery. Um, can you step in and help folks if they're in the discovery process and and maybe how? And I know you got a ton of examples that you can talk about of things you've done for people just in the discovery process.
I do. In a nutshell, we've got some attorneys really that basically when they get a big, I'll say high net worth client,
Yeah.
because from an attorney perspective, that's when we're most useful to them. Other clients, not so much. It's more explaining to them. But from an attorney's perspective, if it's a complicated financial situation, a high net worth individual, lately we've had attorneys just saying, here's the discovery, you put it together and bring it back to me, give me a week to review it before it's due. And what that allows us to do is really get to know that person and their financial situation and the assets they have. And so we put that together, that goes to the other side. We get the other spouse's discovery back, and then we dive into it. And that helps us. We're able to put together the marital balance sheet, the income and expenses. We look at the bank statements, we look at the credit cards. We're able to analyze what their spending is. One of the things, we talk about that's kind of interesting, and people ask, what did you find? Or tell me an interesting case and things like that. And let me kind of tell you how we do that first, and then I'll tell you some pretty funny stories or pretty interesting stories. But so what we do when we look at somebody's financial picture, we look at the bank accounts, we look at the credit cards, we look at the investment statements. And the thing that we do is you follow the money. So we've got software where we'll upload 3 years worth of bank statements, all the accounts, and it will upload them. It spits it out into these different spreadsheets. Well, we'll consolidate all those bank accounts. And so there may be in this, for example, let's say there's 5 different bank accounts in this spreadsheet that we've taken all the individual statements, uploaded them into a spreadsheet, and then we'll put them all together. So what that tells us is if where the money's going. There's the paycheck. We can see that get deposited every 2 weeks. So from that paycheck, where does that go? Where does that get spent? It may get moved to an investment account. It may be to an account where they pay their living expenses out of it. Where does that go? And so we track that, and we're very good with the detail. If something looks, we try to classify most of the transactions over a certain dollar amount. And that does a couple of things to us. That tells us, you know, how much they're spending, let's say their monthly expense budget is $6,000. Well, is that food? Is that mortgage? And we're able to put that together based upon this analysis. But the bigger part is following the cash. If there's money going from account to account, we like to color code it. And so that way you can see everything going in this count is red, everything coming back from this count's blue. So at the end of the day, you see the spreadsheet, we've got all these different colors. Now, if there's something that's this, let's say orange, we don't know where that money went. So we're going to ask the questions. Where did this $5,000 go? Where did this $10,000 go? And there may be nothing that's done wrong, but at least it makes them answer the questions. Where was this money spent? So,
Yeah, it takes
but
you to
that's
the, yeah, I'm sorry. I was going to say it takes you to like they know the attorneys at least, speaking on that behalf, they see this and then they know what questions to ask, just like you said. It's oh, here's what I need to concentrate on. I don't have to spend all my time on this.
exactly, because if these things match up, it makes sense. This money went to this account, this money came back. That makes sense. We don't need to ask about this, but and that's one thing we do. We'll do a whole we'll the things that don't make sense or the things we have questions on, we'll put those into another spreadsheet and we'll send those to the attorney. These are the things we need, as you mentioned, that we need additional information on, things that you can ask questions of. Where do these funds go? In some of these cases, I've got a couple of cases where, I've found $1.5 million for this one lady where the husband, this was on the investment side. He changed in financial advisors and was moved money over to a different financial advisor. And in the process of doing that, formed a different account that the wife didn't know about. So, she sees 4 accounts going to 4 accounts, not knowing that there was a fifth account created there that that he was putting money in because he was pre-planning his divorce and separation.
Yeah.
And so, that was something that the attorney didn't see. So we came back in and we're like, okay, these are the beginning balances here. This is the ending balance here. What that they don't match up, and it just so that was a situation where, you know, we gave that list to the attorney. The attorney asked, well, why is this different? And where did this money go? And we were able to find that and add that back to the marital balance sheet. And she got her share of it. Um, we look at the details on, the discovery part we do. We look at all the tax returns. We look to see if this is the consistent income over 3 or 4 years and this is the consistent taxes paid, it may look reasonable. What's their source of income for all these taxes? Is it investments? Is it bonus? Those kind of things. And then that kind of tells us what direction we go to. Another example is, we were looking at 4 years of tax returns for this one couple. Notice the income was pretty consistent, might have increased a little bit, which you kind of expect and hope. The taxes were pretty consistent until the year before the divorce, and we noticed that it was $1 million higher than it was the previous year. So what the husbands planned to do was, hey, I'm going to overpay these taxes. When we get divorced, I'm going to file an amended return, and that money is going to come back into the joint account that I have custody of post-divorce. And so we were able to find that, and get that added back to the marital estate. And so that was, another half
I,
million dollars that the wife.
yeah. I've heard of a lot of, you know, hidden accounts, but to be hiding an account in the IRS,
Yeah,
that's pretty amazing. And you found
pretty
that out.
creative.
Yeah.
Yeah, yeah.
Uh, it seems also like what this can do not only is necessarily find things that are bad or wrong, it's to not find them. And because
Exactly.
these, you know, spouses can be at each other in not necessarily reasonable, and it's like they're almost wanting something bad. And you can kind of bring them back to reality of no, this isn't them doing anything wrong. So let's get that behind us and start working on this other stuff.
And that's an excellent point, Steve, because when people go through divorce, there's mistrust. And we've been in situations where we've been brought in to find things like that, where we think the husband has dissipated these assets, and I'll go into that as well. And we think that he had these separate funds, and we think he's commingled them into the marital estate. I've had situations where we've searched high and low, and the guy, or we'll say spouse, we won't say guy, but the spouse in this situation kept everything separate, and there was very little commingling of assets. So in that situation, we didn't find anything of significance, but it brought, like you said, it brought more trust. Okay, I feel better about it because I don't feel like I'm getting cheated out of anything.
Yeah.
The spouse feels more peace of mind's the word or the phrase I'm gonna use, where they feel, okay, we looked at that, there was nothing there. I feel better about it going on. I don't feel like I'm getting cheated out of something or ripped off or anything like that. So that's helped a lot. One of the things that we kind of touched on that I didn't mention during my forensic accounting description was there's a term called dissipation. And we do a lot of that. And what dissipation means for the people that don't know what it means the spending of marital money for non-marital purposes. And what that could be is it could be a girlfriend, it could be putting money aside for themselves. But most of the time, it is related to a significant other or a girlfriend or a paramour or something like that. And one of the things we do is we track that down because in dissipation, at least in Tennessee, if the money's spent in dissipation and you can prove it, it gets added back to the marital estate because the spouse is entitled to half of that.
Yep. Yep. Same in Oregon.
Yeah. So a lot of what we've done a lot of cases that way where one spouse has had a girlfriend or boyfriend or whatever, and we've gone through to see how much have they spent on them? How much money of our marital money was spent on this person? Would they buy them gifts? Did they take them on trips? Did they travel different places? And what one of the things I mentioned, the way we put things together and upload these statements and put them in a spreadsheet, it's particularly helpful in looking for dissipation because, somebody may put one or two, let's say, I'm going to use a husband in this situation, takes a girlfriend to Miami for a trip, a weekend trip. They may put some money on this credit card. They may put some money on this credit card. When you look at that credit card, you see one charge, you don't think anything of it. But when you put everything together, you're like, oh, from July 2nd to July 5th, there's a whole lot of charges on these when we put all these things together. So anything between that date and that date, you'd probably think would be dissipation because they were in this place with that person spending money.
Yeah.
And so you would try to add that back to the marital estate. So that's a helpful way that we find things that way as well.
Oh, we've had we've had clients we've had to tell, no, you cannot buy your fiance a wedding ring until the divorce is over.
Yeah, yeah, yeah. And then you get the one that, hey, can we hurry up and finish this so I can get married? And it's
Yeah,
like, yes, it's just what you said. It's like,
it's crazy.
yeah.
People, they don't know what to do. I mean, they just kind of, and then so they do it. Yeah, there's got to be certain kinds of cases, though, that you get involved in that are especially challenging. And really, your expertise is especially useful.
And I'll give you a particular example of that. Like I said, I've got a background in development and construction and real estate, and that's probably my expertise because we had a case last year where the guy had a partner in his business. They bought 100 acres of this commercial property. That let's we'll just we'll use that as an example. Let's say they bought 100 acres. Well, they sold 50 off it this year. Then they sold another 20, and then they sold another 10 and another 10, and they said, okay, we've sold it all. And so they didn't disclose it on the marital balance sheet or in their discovery assets. And so we go back and we start adding up. Okay, they started off with 100, they sold 50, there's 20, there's 10, there's 10. Where's the other 10? Oh, well, we sold it. That's part of it. So we started going back and looking at the parcels and we pieced together another 10 acres that was right on the interstate, right off an exit, right across the street from a Buc-ee's that had probably a $4 million value.
Yeah.
It just left off. And so that was the other thing that my background was helpful in because we knew how to look for those things and add things up and, do property tax searches to say, hey, this is still in that partnership's name. So,
You know, it comes to mind that it can it can help a person even if the person is doing this because sometimes they just don't know they're not supposed to. And if you can bring out that, well, hold it, here are these issues. And if you go to the court and you try to tell the judge that, they don't exist, and then someone puts down something that says, here they are, you're just going to get nailed. And so you can actually sort of protect clients from themselves.
you do. And the other thing, in this particular case, we do look at all the documents. In this case, this guy, he happened to be kind of a shady character. He had a partner, and we could see he gave us all these documents of transferring this asset to my partner. We had a capital call. I was unable to make this capital call, so he diluted me from 50-50 to 90-10. So, okay, show us those documents. And so we look at those documents and the dates on them. They changed certain dates on them, but some of the dates in the documents were for 6 months in the future. There's no way that's a valid document because you took a document you had from September and you backdated to January, but you didn't change some of the dates from September. So it's like it was just crazy. It was, but some people missed them. The attorney missed it on the case, and so we came back
Yeah,
through and found it and brought it to their attention. And it, because as you said, the judge saw the intent and just really crucified them. He really
yeah,
got on the case. It was
yeah. It's there's a thing out there floating around right now that is called litigation abuse. And you are the kind of people that can catch that because it does go on. They figure the other side doesn't know what they're doing, and so we'll do all these shady things. And that usually happens when there's not an attorney on either side of the case. Do you do you ever get, like odd things? So I was kind of thinking like, what if there's a couple family trusts involved? What if there's, self-employed, business people? I mean, those have got to be kind of tricky.
those are the hardest ones. I've dealt with a few trusts, but the self-employed people are the hardest because they can run personal assets through the business. There are personal expenses. There may be their car may be paid for by the business. Their mortgage may be paid through for the business. And then so you have to kind of go in and say, you've got to pull out and add back those expenses. So
Right.
you pull out those expenses and say, okay, these are your business expenses. We pulled out your personal expenses. We want to see, this asset is still a marital asset. But you own this business and you're married, so it's a marital asset. So, we want to put a value on that business. So you have to kind of back in, take out certain expenses, just to see what the net on the cash is and the business valuation. So that's hard. And then sometimes, like you said, the self-employed people can divert money. They can take payments and not record them. They can do uh, business for somebody else. I'll do this for you. You don't have to pay me. I'm not gonna put this on my books. You just give me the cash or something like that. That way it's not reported. The spouse isn't aware of that money coming in. And so they're kind of stockpiling that on the side.
Yeah. Yeah. It, if someone, if I came to you and I said, okay, you know, what, what is my goal? What should I be, striving for with your services? Is this to, you know, make everything clear? I mean, can it help with my case? I mean, how do you kind of work all this into helping their cases? Because, like you said, you've done mediation, you've done uh, uh, valuation. There's all these things that other. Do you give me advice? Do you give advice to my attorneys, or do you work? We all work together. How does that kind of come together to make it work?
That's a great question. And let me see, I'll try to answer it in the simplest form as I can. We
Oh,
have
good, because I need that.
we have different clients, I guess. Sometimes if the client hires us directly, it's to help them understand their situation, their financial situation. So we're their advocate to help them ask the right questions to the attorneys and to understand their financial situation. I've got this big 55-inch television that I use as my monitor, and I put things up there. And so that way we can all look at it and talk about it. Now, from an attorney's perspective, they bring us in to help get our arms around the situation and kind of help them explain the complicated bonus plans to them. If they think there's hidden assets there, if it's a complicated financial situation where there's a business valuation, a lot of times this attorney will hire this appraisal and then the other side will hire their appraisal and you get two different appraisals on this
Yeah.
business valuation and they're so far apart. It's like Ryan, can you look at both of them and let me know what you think? And I help. in that way, interpret it. Now I'll say, well, I think this one has a good approach, but they left this, this, and this out. And the other one, it just, I don't agree with the theory behind their appraisal. They left this stuff out. So, I try to help them, go the right direction, ask the right questions. This is where you should focus this is your biggest, the biggest area of unknown is this. So maybe you should go down these questions. This is a big asset that we've really not really paid attention to, but we should because there's potentially more value there. Um, Deal structures, what's the best way to allocate these assets, these marital assets? If we do it this way, then it's better for the client. One of the things that's come up recently, we start looking at their living expenses. And, if let's say the wife wants to keep the house, and a lot of times in the past, it would be more expensive for her to keep the house than it would be to get an apartment. But we're still seeing some of these mortgage rates at 2.5% and 3%. And
Yeah.
so it's like, your mortgage is going to be less if you stay in the house, if you're able to financially, if we're able to work that where you can do that, from a cash flow perspective, that's a better option for you. You know,
Yeah.
you're getting building equity in the house and your payment's still less than what a three-bedroom apartment would be. And that's, you've got three kids, you're going to need something bigger than a two-bedroom. So it's, we give them different options that way and try to explain in terms they understand what the best direction would be. Attorneys are smart though. They know they get a lot of this, but there's some complicated situations that sometimes the attorneys just simply don't have time. We've
Yeah.
got all these other cases, Brian, help us explain this, and then, let's do it that way. So
Or it's your expertise. I mean, you're the one who knows it the best. And well, you just said something about mortgages. I know we're almost out of time, but this was fascinating. If someone has a 2.2% mortgage and someone has a 8% mortgage, I mean, the value of the home is probably different. It just feels like, that's something that goes into the stuff you're working with. And I wouldn't have kind of figured out that.
yeah, thanks.
That was great. That
Thank
was
you.
wow. Well, unfortunately, we really are out of time, Ryan, but thank you so much for being here to talk today about understanding forensic accounting and not just the accounting, but the litigation support that it provides in a divorce. I think that's wonderful. But before we go, Ryan, if someone wants to get a hold of you, can you let them know how to do that?
Absolutely, Steve. Thank you for having me today. I appreciate it. I've really enjoyed our discussion today.
Oh, yeah.
The best way to reach me would probably be our website. It's www.freedomfsg.com. And there's a button on there they can click and it says schedule a consultation, and it's a free consultation. Or, that's probably the best way to get a hold of me. Or if they're like me and they like to pick up a phone and reach out, my phone number is 941-945-2846. And we help people throughout the United States.
Oh, I love that. And that's a great thing. That's a great thing. So again, thank you. Thank you for joining us today. And everyone else, thank you for joining us. Anyone has further questions today, you can always also post it here and we can get you connected with Ryan, or of course, you can go straight to Ryan. And until next time, then stay